Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily. Today is February 12th, 2026. In today's video, I'm going to be giving you a window to my thought process on what I think is potentially playing out in Bitcoin. As you can see me drawing these lines here. We're here. Not financial advice, but I have been doing technical analysis for about 18 years now. Originally was taught this process by my father, who was an options trader for Stratton Oakmont. And I've took the process, the internet, AI, and ran with it, adapted to crypto. And I've been in crypto for about 11 years now, all the way back since like over here. So, trying to give you my thought process on what I think potentially is playing out short term, mid-term, long term, and why. Backing up my opinions with data. I'm really good at finding previous trends, especially with crypto, because for some reason it is more technical analysis driven than other markets. It's a little bit more predictable in my eyes. The patterns that play out in crypto are like to a T if you were to open up a book on technical analysis. So with that being said, it helps someone who knows technical analysis. When I do technical analysis, I always start on a longer time frame. Longer time frames predict bull and bear markets. What I'm looking for is price action, trend lines, liquidity levels, and I'm looking at two to three indicators: the MACD, RSI, and the stochastic RSI to help me understand momentum and which way it's going. If it's a continuation to the upside, continuation to the downside, are we forming a top? Are we forming a bottom? Are we overbought? Are we oversold? Are we getting divergences? And all of those answers go into a matrix in my brain, and it helps me understand momentum. That's all you're looking to do, is understand momentum. And then if you could understand momentum, you could understand how much money you need to allocate towards the asset that you're looking at. Because if you could understand momentum and if there's room to grow, you want to be more in the asset than more in capital, in cash. If there's more room to bleed, you want to be more in cash than you are in the asset, because then you have room to grow, right? In the bullish scenario, you don't want your money to be in the dollar, which is a stable coin, right, at the end of the day. And when the asset's going down, nothing's better than having cash to buy the projects that you believe in, love in, and cherish, just at a very, very low price, especially in crypto. Bear markets, as you could see, if I were to go to any one of the altcoins, let's just go to Doge because it's the next on the list. Follow me on X. I was posting that Doge, Chainlink, and ADA pretty much all of the same chart. But my point is, from the 2023 low to the 2024 high, Doge is down a cool 83%. There's meat on the bone, baby. Meat on the bone. Meat on the bone back to where? I'm going to assume over here, like that 22 to 29 cents. But back to Bitcoin. To me, it looks like it's forming a rising wedge. The rising wedge does come to an apex moment. Now, the thing that I don't know is I'm getting like double top vibes, right? I'm getting like double top vibes. We could go back to this level of 104,000 if we don't collapse, and then potentially fall down closer towards the end of the year, leading into 2027. Now, the reason why I say that, let's back that up with data. As of right now, I have been in this game for multiple halvenings, right? And people will hold an argument saying that the halvening doesn't matter anymore, but once again, I started the video with, I'm really good at finding trends. So what I do is I find as many trends as possible, and I confluence them to see which ones have higher probabilities of playing out. So the white lines that are vertical are your halvenings. Halvening happened, and unfortunately we went from 60,000 to 125. Each pump is getting smaller and smaller. Each consolidation is getting smaller and smaller. Bitcoin doesn't crash because crashes don't make higher lows in a 14-15 year span and they don't make higher highs after they crash. These are consolidations because the asset has made a higher low, higher high each time. What I don't like is what I've just said. It's making smaller highs and less consolidations each time, and eventually we'll make a sideways pattern, which will be the end of Bitcoin's S-curve. What happens during that time period, I don't know. I could speculate till my face turns blue, but until that happens, we shall see. As of right now, the next halving is going to be May 2028 over here. So, with that being said, just to throw it out there, after the pump, there's the consolidation. Pump, consolidation, pump, consolidation, pump. And just to give you a quick visual, I could always just put this back. We're in like that halfway to second half part of the consolidation, right? I mean, we've went from here to here is bullish and then down. From here to here is bullish and then down. From here to here is bullish and then down. So from here to the middle, I'm going to assume that that's another trend that stays true. Now, another trend is you don't know what's going to happen with Bitcoin. And what could happen is you're going to have people of power, people who have a lot of influence, people who have a lot of subscribers on X, people whose names rhyme with Raoul, and people like that who are going to say that this cycle is different and this is not a 4-year cycle anymore, it's a 5-year cycle. And I was explaining to one of my close friends literally last night that those things mess with every single piece of data that I just told you. Like, don't worry about the data, right? Just look at someone's tweet. And that's not the way I work, right? That's not the way a scientist works. I don't care about people's opinions. I care about data, trends, and duplicating them. I don't care about tickers. I care about what indicators tell me. It's just that simple, right? So we're here, and what I think could potentially happen since the asset is so oversold so quick, this is on the table, right? Let's delete everything and go back to this right here, right? Like we are staying above the support line of the rising wedge, right? Which shows me that we could go back to and retest around these highs here, right? We could go to here, this 100,000. We could go to here, this 92. Either way, 20, 30,000 to Bitcoin is going to be astronomical. To alts that are down 80%, there's going to be a ton of room to grow. I was talking to someone this morning, and all the gentlemen that always ask me for my advice. I said, brother, when I take profit from assets, I'm not looking to go do stupid stuff with the money. I'm looking to put it into assets that are extremely oversold. So it's a rinse repeat money transfer, right? And because he was asking me, what do I like? We were talking about stocks, and I was like, crypto. I was like, some altcoins are down 80, 90%. That shows me that long term, ton of room to grow. Another question I was asking myself is tax purpose. Is it short term or is it long term? Anything we buy right now, and if it goes back up by 2027, 2028, obviously long term capital gain, so that's nothing to worry about. Even Bitcoin, I was telling everybody, 60, 50, 40, right? I'm just chit chatting with you guys, giving you everything that's in my brain right now, right? Another trend is, Bitcoin went down 87% in the first cycle, then Bitcoin went down 85%, and then Bitcoin went down 77%. So to assume, right, let's just branch this conversation out. To assume that 50% is the most recent crash is not so great argument, right? Let's think of it just like a scientist, right? 80s, then 70s, what happened to the low 70s, high 60s, right? So the reason why I'm saying that, and this rising wedge is bearish, right? So 50%, we could definitely go down lower. The rising wedge breaks down. But remember, consolidation, because each low, right? Your last low is here, and then the next low is here. All right, the one previous to that was here, right? So a 50% correction takes us to this liquidity zone right here, right? If we were to break this, I'd probably set alerts. I would definitely set alert, not probably. You need to set an alert right here around this 56 to 50,000. If we were to break that, that means it's the alert's notifying you that you're breaking down on the rising wedge. I was telling another person, I talked to a lot of people. I was telling another person who wanted to invest into Bitcoin who didn't, right, in the past 15 years, 13 years of me telling him buy Bitcoin. He finally, not finally, I shouldn't say that, but he has a large amount of money that he wants to invest. And I told him I do 30, 30, 30, 10. Just like I told every one of my previous videos, 17, 5, 15, 5, 13, 5. Well, 50% down, I would like someone in my inner circle, not financial advice, to put, if they have 100,000, to put about 25,000 and 25 to 30,000 so that you're in the game, right? Because like I said in my last video, the first question you ask yourself was if and when it does go back, you're looking at 100% return on that original 20, 30,000. And then I said if we break and we go down to the 50s, well then you're looking at 150% returns, right? And then Bitcoin would be down, if we go to this level here like this 45,000, that's 63%. And then I'm looking at this level right here, this 34 to 35,000 right here. That's 74%. Right here. I want to know where the whales stop the selling pressure. It wasn't you, Cuzzy. It wasn't me either. I'm in the same boat as you. But we didn't stop the blood from 62 to 30,000, right? We also didn't stop the run here. But that's my point, right? So, boom, 60s, 50s, 40s, and keep 10% on the side just in case we break 40,000. And at that point, you have massive gains on the table, right? You're catching the asset around the bottom. And if it was to go just back to the all-time high, you're looking at 274%. And then we need to see where it bottoms out in order to pull out the fibs, right? If it's here, excuse me. Right, if it's here, your next high could be 163. If it's down here, right, you're looking at 175. If it's all the way down here, you're looking at like 178 to 200,000. So at that point, once again, I'm just playing devil's advocate. Your buys here is 100 to 200%. Your buys here are 300%, and then your buys here are a cool 400 and 500%. The last buys here that I told everyone, 17, 15, 13, this was a cool 700%. So once again, the pumps are getting smaller, the dumps are getting smaller. So going from 78, 79 to 72, 73, yep, that lines up. Going 4 to 500 compared to 6 to 700, yep, that lines up. So now we just need to set some alerts, bro. Like set an alert of 49,901. That'll let you know that like literally we've broken this most recent support and we're heading down to these liquidity levels down here. That's that. When we do this, you can take a nice little screenshot. Okay, here's your levels, right? We made higher lows, higher highs. Here's your rising wedge, right? 1, 2. Now we're here again. We're back at this liquidity level. Now let's delete everything, right? Because I want to turn on some moving averages. Moving averages give you another visual. And the visual that I was seeing, there it is this one, right? The first thing I want you to notice is this is the first time that the candles are forming below all of the moving averages. And what does that mean? Well, that means that momentum is changing. Remember when I told you all I'm looking to do is understand the long-term trajectory of the asset and do as minimal trades as possible, right? Or understand what to do. So another visual, another confluence, another trend is I like to see how the asset reacted when it did certain things with moving averages. I didn't even turn on a MACD RSI and stochastic RSI yet. So once again, all of these thoughts going on in my mind. And the first thing I want to look at is how did it react the last time it has happened? How did it, like what happened the last time it was punched in the face? It was punched in the face, right? It was punched in the face. So let's dig deep, right? This video, we're going to go into it. Take out your pads. Let's get ready. So we fell. We were in a bear market. We used the moving averages as resistance until certain parts. What I like to do is now figure out when did those parts happen to help me understand we're close to the bottom. And if we were to recover right now, am I expecting another lower high? Right? So let's right? And what I mean by that is, one second right here. If anyone remembers me saying, wouldn't it be crazy if this bear flag played out on Twitter? I could find it. It's there. Obviously, I don't delete stuff. Like, comment, subscribe, put bear flag in the comment section. But like, it's on the table that we do another bear flag, and the bear flag takes us down to, these levels of the 42 to 45,000. And the reason why I say that is, now let's dig deep, right? I'm going to look at this part of the bear market to see where the indicators were, where the indicators were, right? And where the indicators are here to see if there's a trend. If there's a trend, to help us identify when we're out of the mud, when is the best time to put the majority of money into the asset, to understand that there's more risk, more reward than risk on the table, then I'm going to use that, bro, right? So once again, let's go into it weekly, 1, 2. So let's go into some indicators, and I'm curious to see how far down, once the indicators broke, once the moving averages broke right here, how far down did we go, right? That's a first question that pops up in my head, because I'm curious to see how much room there is to bleed at the current situation, right? Factoring in that it could be smaller, right? Because each one was smaller. So this one took to like officially bottom 196 days, 55%. Previously, this was the jab, right? But even this one was 46% in 7 days. It's wild, which is why you always want to take profit, because you always want to have capital on the side to reap those type of opportunities like that. Last time this happened here, really bottom was here, 35 days, 45%. What I mean by really bottom was on the macro level, the level I'm looking at, the weekly time frame, it formed higher lows, they're out, right? It formed higher lows, they're out. And then previous here, right, we broke down. I consider this the bottom here, because we came down, same low, same low. So this was 49 days, 43%. So, I'm totally cool, me and myself and I, and telling people like my dad, my brother, people who have like little slack in the game, like, 30%, yeah, sure, throw some numbers in, understanding that this, potentially that we could break this low of this 60,000, and how you want to have some shekels on the side just in case it goes down 42 to potentially 57%. You know what I'm saying? Another thing, another sad reality that you have to come to is, if the charts are telling you something, you have to take your emotions out of this, bro. You can't say, yeah, well, I'm heavily invested, so, this doesn't make sense, this is stupid. Like, bro, we're literally at the beginning stages. We the first leg down, It's not like these things usually have a quick V-shaped recovery like we did in 2020. That's another thing, right? Like, this one took, to start breaking the moving averages again, 200 days. This one took 133 days. This one took 160 days. But as long as we don't die, we're good, baby. As long as we don't die and we have capital to buy back in, where this is the best opportunity ever, right? I hate chasing green candles. Once again, I said in one of my previous videos, once we turn bullish, I instantly start thinking bearish and when to take profit. Once we turn bearish, I'm instantly bullish and I'm thinking, where should we start buying, right? And another visual is this one here, right? I'm looking at the like the 2 week. Remember I said in one of the previous videos, and I said we were forming this pattern. We were between these squiggly lines, like we were here, like we were here, and like we were here, and we fell to the yellow line. We fell to and a little bit below, but we fell to that yellow line. The chart did not lie to me, and I didn't lie to you once again. Now, understanding that we could go to the yellow line or a little bit below helps me understand where I should be putting my buys in. And you can see we're getting some nice buying pressure on the 2 week, right around the 100-day moving average. That's that. All right. Green. If we were to break the 56, we'd go to this green, which is once again at 40 to 42,000. Indicators. So what's going to help us understand when we are out of the mud? It's probably going to be like the weekly, the 5-day, the 4-day time frame. We need to see indicators in good sections. The first one's going to be the RSI. If the RSI on the weekly, 5-day, 4-day, actually no, I'd say 5-day. Yeah, 5-day and weekly. If you see the RSI, it's getting a little bit messy here. All right, this is the reason why I made this indicator. When it's white, the RSI is above the 50 on the time frame you're looking at. When it's pink, the RSI is below the 50 on the time frame you're looking at. The reason why I was flipping in between the time frames is I'm looking to see when this happened and we went bullish. It's very simple. When the RSI is above the moving average and above the 50, right? Because you could see here we went below the moving average, but as long as we went down to the 50 and stayed above, it's a continuation to the upside. So the first thing I see now is we are below. We are below the moving averages. We're pink. We're below the damn 20 line, showing me we're so oversold. Stochastic is below the 50 and your MACD is below the 0. So the first thing I think of is dead cat bounce. Recovery, right? This was a 20%, I think it was. Yeah, 20% back to the moving averages. And I think that could have another play out again. If we were to go back to these levels here of 75 to 84,000. I believe that is a 22 to 30%, yeah. And then rejection again, right? If we see that, then we see rejection under the 50 line from the RSI on the weekly time frame, then you know we're stopping at that and we're at least coming to retest the lows of 60,000 again. Another confluence that helps me understand that that is on the table and back that up is the Bitcoin CME futures chart. There's a gap here from 79 to 81,000, so I think we do come back up and we do that. Boom, boom, 34%. This one was 20%. On the table, that's the video. That's what I think happens. In order to understand when, I'll probably be watching the 1-day, 2-day, and 3-day chart. I'd like to see when the stochastic RSI on at least the 2-day and the 1-day breaks above the 50, and I need to know when the RSI breaks above the moving average as well as breaks above the 50, if that's even possible. If it doesn't, then we're going to see rejection again like we did here. Yeah, you can see we've just broken above. So now I need to see this break above the 50, and then we'll have room back up. As of right now, though, I'm bearish, obviously. You have, I'll leave you with this, right? Like, once again, 2-month charts. You can't trade with this, but it gives you clarity of like what's going on. We're on the horizon of like the worst 2 to 4 months ever, right? Not my opinion. Like, when certain things play out, when the stochastic breaks the 50, we're below, and the MACD's in a death cross structure or just about to. You could see here. I mean, we went from March to May, we went from 34 to 19. All right, let's look previously. Death cross structure below, breaking the 50. From July to November, we went from 7,000 to 3,000. Same thing here. We went from 356 to 162. So right here, if we went from 100,000, down to 35, 47, yeah, I mean, that's on the table. 58,000, 51,000. I'd get some shekels on the side for 35. That's the video. Love you guys. Appreciate the support. Enjoy the day. Comments, question, concern, leave it in the comment sections. Besides that, once the market turns bearish, I'm thinking more shorts. I'm not looking for dead cat bounces. The reason being is you will get a better ROI out of a short in a bear market compared to a long in a bear market. Same thing, vice versa. Enjoy the day.